probably the single greatest use of AI that we're seeing is in credit. And of course, this is where a lot of the statistical analysis techniques began, many, many years ago, looking at probability of default and loss given default. AI can make these models better by learning from your experience and training themselves to predict default and to predict loss severity. But I've also seen them used to predict collateral values, particularly in home loans, to predict credit line utilization, to help determine the best collection strategy, to predict where risk is rising before it actually shows up in the delinquency numbers, to do loss forecasting, to look at prepayment risk, and interestingly, to look at the risk-adjusted return of a particular loan. The second big area that we see a lot of companies using AI in is financial crime. And this works particularly well because of a couple reasons. Number one, the data is generally available and it's pretty good. Companies know where they have had fraud losses and can typically relate those losses to transactional patterns. The second area of financial crime we see a lot of work in is anti-money laundering. In most cases, banks have a investigational unit and a case management system where they capture all of the data related to the suspicious activity, and they know what their findings are. They know whether those activity patterns were found to be suspicious or whether they were found to be completely innocuous. In many cases, these financial crime detection mechanisms are not very efficient and not very effective. And with AI and machine learning, you can use all of that data that you have to build very highly precise predictive models for detecting and preventing fraud and for alerting you to suspicious activity patterns which may be money laundering. The third thing that we see a lot of work is improving the client experience. Clients increasingly expect you to know who they are and expect you to be there with the right thing when they need it and not to bother them with irrelevant offers. And when they need help, they expect you to get them to the right people very quickly without having to go through an arduous process to find the answer they need or the help that they need for a particular problem or transaction. With AI, you can analyze clients' needs and predict exactly what their situation is and what they may need from you, whether that be an operational problem or whether that be a new product or service that you can fulfill. You can also predict client preferences in terms of how they best want to interact with you or what their pricing preferences are. So, there's a lot of work I've seen going into improving the client experience. And I think banks that put the effort into using AI and machine learning and all of their data in this area can significantly differentiate themselves competitively in the eyes of their clients.